This week, we're talking supply and demand numbers and retail prices. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, we'll break down those reports coming up. We'll preview cattle on feed numbers and livestock slaughter, which come out next week. But first, let's recap what happened this week in another wild week in the markets.
Yeah, that's right. If we start on the cattle side this week, Megan, we're going to call live fed cattle $3.40 higher this week. I show north of $194 for fed cattle, so we're back at the upper end of the range here on fed cattle. Feeder cattle markets this week, I'm going to call them $3 to $8 lower from the markets that we saw this week. If we look at the futures side, the February live cattle futures contract closed up $6.20, and the January feeder contract was up $1.75. We also saw the choice box beef price up this week, up $3.35. That now puts it nearly $22 over where it was a year ago at this time. A lot of strength in things like ribs this week, I think, helped that choice box beef price. On the hog side, cash barrels and gilts, 75 cents higher on the week. The February lean hog futures contract was down $1.85, and we gained $2.98 on the pork cutout value this week. We really had strength across the board and everything except ribs on that pork cutout value.
This really, I think, has been a wide range of what's happening just on the cash cattle markets in general, depending on where you're looking. There's been some records in some different parts of the country. When we look at this, and we'll talk a little bit about the supply element of it coming up in a little bit, but as we're talking about these prices and these price levels, I don't want to beat this topic to death, but risk management, right? Like, these are levels that we may never, or it may be a long time before we see again in some of these cases.
Yeah, so I think a lot of this, I'll stay cattle focused in responding of, we're at very tight supplies. There's a lot of thought that supplies will get only tighter, but I'm trying to balance what's that very tight supply situation against, can demand continue to hang in here? And we have retail prices that we can talk about as well this week. At some point, you probably have pushed cattle prices as far up as you can, yet it looks like we're going to be even tighter here in 2025 right now. And so markets bounce back and forth, just a little bit of new information, and we either go higher or lower as everybody senses, we're in kind of what we might dub new territory. For those that can't handle the possible downside risk, there are just so many tools to do price risk management that you really need to do that. I hate to venture too far out into 2025, but maybe we're not done with where record prices go. But at the same time, when do consumers maybe decide there are some cheaper meat protein alternatives for them to very expensive meat?
Do you think, and obviously not getting too far into 2025 and not putting the cart before the horse here, but thinking about that January cattle inventory, are markets going to hold their breath, really kind of getting into that to see what that report shows?
Certainly from an inventory standpoint, it's the first real data we have since January 1 of 2024. It's why we talked about having a July cattle report would have been helpful in this period of when are we going to grow cattle numbers. So I think this report's going to be very anticipated. I've been saying I won't be surprised for some states to show increases in beef cow inventory and other states to show declines in beef cow inventory. I would expect the overall impacts are to be lower in terms of inventory. maybe not as big of decline in percentage terms as we saw in the January 24 report, but no real overall building. And so I think that then raises the question of, we've kept feed yards fuller than I think anybody probably would have thought we could this year. And does that change as we get into 2025? And if it does, then I think you have a lot of different players within the chain on the cattle side that are going to be battling each other for margin coverage. So is it packers that ultimately run a lot of red ink? Can feed yards continue to see black ink when they're going to pay what they have to for feeder cattle? So I think it's the participants along the chain that have to start, battling, and I'll say cow-calf producers will be in the driver's seat as long as beef cow inventories stay low.
All right, so let's talk a little weekly slaughter before we get into those supply and demand numbers. As you take a look at this week, what do the numbers look like?
Yeah, so USDA tells us for the week ending December 14th, a run of 609,000 head of cattle this week. That is just 5,000 less than we did last week, but 38,000 head less than we did a year ago. And on the hog side, a run of 2.573 million head of hogs this week. That's 29,000 head less than we did last week, and 122,000 head less than we did a year ago.
And as we take a look at those numbers year over year?
Yeah, cattle slaughter is down 3.7% year to date, and hog slaughter is up 0.7% year to date.
All right, first big report out this week, supply and demand numbers. And as we take a look at these numbers, I think let's talk beef production first. And the conversation we've been having about Mexico is coming into play again.
Yeah, so big time. It's the biggest piece of what we saw out of this month's report from USDA. So USDA told us for their 2025 beef production estimate, they turned out here in December, 25.7 billion pounds of beef to be produced. That's a reduction of 615 million pounds from what they said in November. So November, they were at 26.3. In December's report, they fell to 25.7, all with the assumption that since the Mexican border is closed to feeder cattle coming in from Mexico, that will continue in 2025, and thus the reduction, at least probably a big part of the reason for the reduction that they're showing in beef production in 2025.
So my question is, we're already starting to see reports that the border in importing cattle from Mexico could resume sooner rather than later. Does this feel a little cart before the horse to make this production reduction estimate and not maybe watching how this plays out?
So I do think we hear more and more about the resumption of Mexican feeder cattle coming into the United States. I'll tell you the day after the deal is done that allows that when it happened. But it seems like perhaps we're getting closer, and there are always going to be bumps along the way in figuring out appropriate protocol for that resumption to happen. The idea that we'll be without Mexican cattle for all of 2025 might be a little extreme, but USDA's tended to take this strategy in other cases, other commodities, when trade has been disrupted like this. So I'm not surprised, but I also won't be surprised for USDA to come back and raise 2025 beef production fairly quickly if Mexican feeder cattle are allowed back into the United States and we don't have other issues. I mean, we could still have other screwworm cases come up that will certainly change the outlook for 25. But given what we know right now, it would seem to me that coming back and raising beef production might be in the cards if we again start taking Mexican feeder cattle.
Would we then see maybe an adjustment potentially to prices that USDA does as well, because they release their 2025 cattle and hog prices as well?
Yeah, yes. So I think it's important. All right, so beef imports here for a minute. USDA raised beef imports for 2025 by 195 million pounds. 4.7 billion pounds of beef imports for 2025 is now their projection. Uh, we're talking about 4.6 billion pounds coming in here in 2024. So I think that's also in their assumptions about feeder cattle coming in from Mexico. So we get more beef imported. And on top of that, beef exports then reduced to 105 million pounds this month for 2025. I think all of that is consistent with then assuming no feeder cattle coming in from Mexico. On top of all that, yes, they raised fed cattle prices by $3 a hundred. So $1.91 annual average feeder cattle prices is where USDA's at for 2025. If they bump back up production, I wouldn't be surprised to see some reduction in prices as well. So they're suggesting, third quarter of 2025, $1.92. Again, it's not my place to say USDA is wrong. That's not what I'm saying. I think very consistent given what they've assumed here. But again, I think that all changes if that border opens up to feeder cattle from Mexico.
Definitely, it'll be an interesting story for us to watch for the remainder of 2024 into 2025. Before we wrap up talking about the supply and demand numbers, we've talked about the price picture and production on the beef and livestock side. Inputs as well. There was an adjustment to soybean meal prices, right?
That's right, Megan. So USDA lowered by $20 a ton their estimate of soybean meal price. They're now forecasting for the year that started with last fall's harvest, now that we're going to average $300 a ton instead of $320 a ton. They've kept corn price at $4.10 for an annual average, so no change on the corn side. I think that's still important for us. We talk a lot about livestock prices, but the fact that feed costs have come down so much has helped all of these livestock sectors look more positive than where we started 2024.
I would say definitely contributing to the recovery in profitability, especially on the hog side of things.
It's amazing how $4.10 corn looks a lot better on the way down than it did on the way up when we think back to where we were in 2019 in terms of feed costs.
Retail prices also out this week, Scott, and when you take a look at that, we're definitely seeing higher prices reflected in what consumers are paying at the store as well.
Yeah, so for sure, and especially I think on the beef side, we saw USDA tell us for November 2024, $8.32 for the choice beef retail price. That's 22 cents higher than where we were in October, up 2.7%. And we were pushing all of the components of that choice beef retail price higher. Steaks really led the way in terms of some increase for November, but pushing high prices at consumers. You hear more generally discussion about inflation and how quickly inflation will slow down further. It looks like we'll see how consumers respond to what's happening. When you look at retail beef prices, they're up 3% year to date. So it shows us again what's been happening. 100% ground beef up 7.4% year to date, while steak prices up 5.7%. On the pork side, we saw an increase. So $4.95 for November was the pork retail price, 3 cents higher. So not a lot, but 3 cents higher, 0.6% higher than where it was in October of this year. Year to date, we're up 1.3%. The big jump really on the pork side of the equation was boneless pork chops this month. They were up 6.3% from where they were in October. So a big jump month to month in those.
More demand for pork chops. I think.
So you raise a really good point. If pork demand continues to strengthen in front of us, it could look even better for pork producers in 2025, where I expect on an annual average we will be maybe a little bit above where we were for pork, hog prices in 2024. And then what I think is cheaper feed prices just gives us more black ink than what we've experienced in here in at least the latter half of 2024.
All right. As we wrap up today, previewing next week, kind of a programming note as well. Next week will be your last and your final weekly livestock market update. In addition to it being your last, it's also, we will introduce the 3 economists and beef extension specialists who will be joining us to not fill in your shoes, but to take us in the next direction for the weekly livestock market update. So I just wanted to brace everybody to know that after the first of the year, there'll be some new faces, but we really can't thank you and tell you enough how much we've enjoyed having you for almost 9 years of doing this program.
Yes, Megan, it'll seem like Friday afternoons are emptier from doing this so often. I've appreciated the opportunity to be a part of this for probably longer than either you or I thought whenever we started this endeavor, and I sure hope that doesn't make folks go back and look at our early cuts of Weekly Livestock Update on YouTube. But I think the 3 gentlemen that will be joining us next week will make it even better in terms of their experience and knowledge of especially cattle and hog markets. So it's fun to watch the transition. And for me, I'm headed to some other opportunities, but I will certainly miss our conversations every Friday afternoon, Megan.
Well, I appreciate that. So before you go, I'm not going to let you just roll off into the sunset. When you look at next week's livestock slaughter, cattle on feed, I mean, I know we're going to talk about beef cow slaughter, but what else are you looking for in maybe some insight into those numbers?
Yeah, so I think part of the discussion on cattle on feed is just what placements look like. We were up when we looked at the last on feed report. I hear some out there in the industry that will suggest we've gotten a lot tighter on available supplies of feeder cattle to place. Does that translate in the numbers that we see out of the report next week? I think we've all been waiting for this cliff of drop in cattle placement numbers, and it just hasn't come. And so I think that's at play. And of course, as you know, beef cow slaughter will continue to be what we have to work with in terms of beef cow inventory for January 1. So those are going to be the 2 big pieces. I feel like we've been saying that all year this year, Megan. So I feel like a broken record in saying that yet again.
Well, next week you get 3 other folks to validate your comments for the cattle on feed report.
And then they may be very different places. I'll say none of us know the future with certainty. I think it comes back to where you started with me today again of, hey, there's tools to get rid of price risk. And if you can't afford a lot of risk of lower prices, take advantage of it. We didn't have this several years ago. And so I don't want producers, and I tend to talk to the cattle side just given we're at high prices. I don't want producers to get caught where what they thought was a good investment turned out not to be if cattle prices fell after they bought their cattle. And so let's make sure we use the tools available to us today.
All right. So we look forward to seeing you next Friday. It will also actually be our last show of 2024. We'll take a 2-week holiday break and we'll be back January 10th then, or January 11th, depending on when you watch it, Friday afternoon, Saturday morning. So if you have questions, comments, if you want to say goodbye to Scott, you can make sure to subscribe to our weekly livestock market update at brownfieldagnews.com. You can submit questions and comments there as well. And to get a rundown of what happened every day in the markets, twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.